Hi everyone, just to, oh, excuse me, sorry. Hopefully you can hear me. Can you hear me okay, darling? Yeah, and hopefully you can see my screen as well. Just move the chat box out of the way. Here we go. I've just started with the multiple CSIs just to support for choice really this morning. This is on the 1 minute, this is the 5 minute, this is the 10 minute, this is the 15 minute. On the charts, I've been following the Aussie dollar, which is still continuing to climb. I've got a lot of dollar workspaces, so we're going to have a look at the dollar futures. We'll have a look at the dollar spot matrix as well. But essentially, that's what's going on right now. It's very much being driven by dollar selling, as you can see here. This is on 5, dollar selling on 10, dollar selling on 15. Very strongly overbought the Aussie dollar, so still climbing, starting to flatten off a bit in 1. Maybe a bit of buying coming in on the dollar on the 1 minute. Is that going to be enough to move through the market into 5, into 10, into 15? Possibly. Still got some way to go on 15, so it depends, as always, on your time frame. So that's the Aussie dollar. You can see this is the selling on the yen at the moment. So we've had a complete reversal there. Was buying, now we're seeing strong selling over here, strong selling. So we, in terms of yen pairs, you might be looking at Aussie yen, you might be looking at New Zealand yen. Obviously, in terms of dollar yen, Swiss yen, they're moving in the same direction, so not much going on there. We've got strong Canadian buying, that's suddenly reversed here as well. So that's moving firmly higher. You can see it here on this purple line on 10, and it's starting to kick up here on 15. So there's lots of opportunities going on. So let's just head on over to the various workspaces. Let's start with, this was where the Aussie dollar was. This is on 15-second top left, 1 minute, 3 minute, 5 minute, 10 minute, over onto the 15 minute. You can see how strong that trend's been. It's been developing nicely. We had a bit of a blip at the London Open. Just pop that up, which is to be expected. It's what we always expect to see. And just to pick up on what Anna was saying about the volatility candle, we had one here. This was at the nice thing with NinjaTrader is, which is very different to MT4 and MT5, is it prints in your local time. It picks up your local time. So wherever you are in the world, it will pick that up. So this is 7:45 through to 8 o'clock our time. That's London Open. And this is where we are right now. So we're 18, 19, 20 minutes in. So this was the volatility trigger midway through the, or 3/4 way through the European session. Into congestion, didn't reverse. Then we start to see the continuation of the move. And we've got the trend monitor on here, which, as you can see, is just remaining steadfastly blue, just giving you the confidence to hold that position, because the worst thing you can do is get out. And as Anna said, even if you got out at this point, suppose you got in a lower point, maybe you got in down here somewhere on the breakaway from the volume point of control, and then you get this trigger comes in, what do you do? Well, as I've said many, many times before, 99 times out of 100, I will close out because I've got some decent profit. Markets spike very rapidly. That's increased my profit. I might as well bank it because my expectation is twofold. It's either going to congest or it's going to reverse. And either way, I don't particularly want to be sat in either of those two scenarios. So I just bank it. If you've got multiple positions, by all means, take off some of them and leave maybe 1 or 2 to run. But generally speaking, I would say if you're just trading one, just close it out, sit tight, because in this example, yeah, we sat through congestion. What are we on? 5-minute chart here. So we're sitting through 15 minutes of congestion here. Worry, worry, worry. You know, you don't want to sit through that emotional turmoil of uncertainty. We get in again, the candle forms, okay, we jump back in, we look at the volume, is everything okay? You know, is this going high? We look at all the other indicators, multiple time frames and so on and so forth, and on up we go. And that really is what it's all about. You've lost nothing, okay, you've lost maybe a few dollars of spread and what have you, but in essence, that is the principle. You jump back in again. If it reverses, fine, you're happy. You know, we've now got more volatility coming in. We've had volatility trigger here. We've got a volatility trigger on 10. Nothing on the very fast time frames up here, but certainly in terms of the slightly slower time frames down here, we've got another volatility trigger. You could see the speed of that candle. As I was talking, you may have noticed how quickly that candle was forming, too quickly. And that's the essence of what volatility is. Volatility is nothing more than a compression of time. That's all it is. It's forcing a slice of price action through in a particular period of time that would normally be much longer, but is actually compressed. So 10 pips going through in a minute is now compressed to 10 pips going through in 30 seconds or 15 seconds. And that's all volatility is. It's just a compression of time. But it is immensely powerful from a market maker perspective because it traps traders into weak positions. It draws you in because it is based on the fear of missing out. Because when you see a market moving rapidly like that, your instinct is to jump in because you want to make some quick profits. You see the market moving, perhaps it's been a bit sluggish prior to it. You see this rapid development of price action, your instinct, and it's in our DNA. We can't help it. That's just the way we are. But your instinct is to jump in and join the direction of the move. And then you start to get squeezed and you start to have trader regret and think, why did I do that? We go up onto the 3-minute, here we are. Lots of volume under that particular candle. That tells you that the market makers are participating in there. If there's a ton of volume in it, it tells you the market makers are participating because we've got volatility. They're in there, they've moved it rapidly, and now we're going to start the squeeze. Now, it may well be for a candle, it may be 2 candles, may reverse, but ultimately that's the expectation. It doesn't always happen. You know, there's no always in trading. Sometimes you get little moves like this and we can carry on. Others you get longer extended periods like this, and on other occasions you'll get a complete reversal and the market will reverse against you. But either way, you know, there is going to be some pain here. Let's just pop that out of the way. We're starting to move away on the 5 minutes. So, you know, if you closed out and the next candle is positive for you, fine, by all means jump in again. The other thing, obviously, you're looking at right now, you're up here. This is on 5, I think. Yeah, we're on 5 minute here. So the Aussie is still climbing, very strongly overbought. At some point, it is going to reverse and obviously go in the other direction. But for the time being, we're okay. Dollar's still falling. You know, so that all looks positive. No problem at all. And you can see how the trend monitor across it, even on the 15-second here, it's still blue. It doesn't change when you go through these phases of price action here. It remains blue. It's keeping you in the trend. The multiple time frames are keeping you in. They're still all blue down to 5, blue down to 10, blue out to 15. So the whole thing is just giving you a positive view on where this is going. Have we reached a pause point yet? The only, I would say, indications of a pause point are a little bit worrisome. Is when you look at things like this and you're seeing volume on the up falling away. That's not to say this is going to reverse all of a sudden, but it's a little bit worrying when you see volume driven in here and then you start to see the buying volume start to drain away. So it'd be interesting to see how that develops, because in an up market, you want to see market volume moving up with price. When you start to see volume falling away, what that's telling you is the participation of buyers is starting to drain away, and therefore we might expect to see the market pause. Now, it may well reverse depending on how the subsequent patterns, subsequent candles develop in terms of their price action, in terms of their volume. But at the very least, what that will give you is just an early warning sense that, do you know what? The strong buying that we were seeing in this move in the uptrend is perhaps now starting to drain away a little bit. And when you start to see this developing, what that gives you is a sense of what is going to happen next. It removes a lot of that fear and emotion from the questions that you'll ask yourself is, God, why is that happening? You know, why is this market pausing? And that's what VPA does for you. It gives you that confidence to anticipate with a pretty high degree of a probability of what is likely to happen next. It's not perfect. Nothing in this world is perfect, but at least it takes away that fear when you start to see a market pausing and reversing against you. It will give you a heads up as to what is likely to happen next. Little bit of buying coming in under that candle. The selling pressure under this little candle, that was volume and price in agreement. You've got a narrow spread, you've got sort of average volume, that's fine. Little bit of support coming in for that particular congestion phase. So perhaps we're going to see a continuation of that move. Just having a look over here on the other time frame, see what's going on. Let's just pop up 5 minute. And you know, this is, we're seeing higher volume on this candle, lower volume on that candle, which is curious, because this is a widespread candle, and yet the volume here is pretty much the same as the previous one. And now we've got higher volume coming in here, and yet the spread is maybe half or 2/3 of the previous candle. So maybe that's giving us an indication that perhaps this strong trend that we've had, which has developed a really nice move of 40 or 50 pips, is now starting to perhaps become a little bit tired, a little bit exhausted. You also have to remember that in terms of this dollar selling, you see there's a strong move on the pound, there's strong buying coming in. This was 8 o'clock on London Open. Little bit of a reversal, you know, nice little trap to start with, and then bang on we go up, you know, strong buying continuing on pound. Probably on pound yen would be nice, although the yen's getting down into oversold. Pound dollar, although the dollar is flatter than the pound. So much of the move in any pound pairs right now, certainly in terms of cable, in terms of yen, in terms of pound Swiss, it would be very much buying of the pound that's driving that at present. So we're still continuing. Let's just go on to the futures. Here we go. And what we're looking at here is the futures perspective. Just refresh that. Oh, that else gone anyway. Let's just load this one up. There we go. We're looking at the futures here. This is currency futures, so this is a straight view on the dollar. This is the 6A, that's the Aussie dollar. This is 6B, this is cable. 6C is the inverse of dollar CAD. In other words, it's CAD dollar. And that's why the trend monitor is blue across the piece, or pretty much, other than the dollar yen. And the dollar yen, as I've said many times before, is a curious animal and does not behave in the way you would expect it to. It's fully explained in the program. So we've got the CAD dollar here, not the dollar CAD. So this is the CAD dollar, which is why the numbers down here look a bit strange. So it's the inversion of dollar CAD rate. This is the 6E, this is euro dollar. This is yen dollar, again, curious. And over here, because that's the inversion, and over here we've got the New Zealand dollar. So this is giving you a direct perspective on the strength of selling in the dollar, which you can see here, how that is related to the currency pairs directly, because they're all quoted against the dollar in terms of the futures market. And it's a question of seeing, you know, which is developing the strongest trend. This is the Aussie dollar, so it's exactly the same as we saw in the spot market. It's continuing higher, different exchange rate, but then that's to be expected in the futures market. But in terms of the trend, it's identical, still moving higher, still strong buying of the Aussie. We've also got equally strong buying of the New Zealand over here, down at the bottom right. Just to change currency pairs, there we go. Much the same, another volatility trigger there. Works in exactly the same way. Bit of a pause into that one. Looks as though we're carrying on higher. On the terms of where we're going, we've got the volume point of control here, well away from it. And each time you approach these low volume areas, that is a positive signal for a continuation, because to get through these regions is going to take a lot less effort, and to some extent through this area, than it will to get through these areas, because volume works in exactly the same way as price-based support and resistance. So not only does the volume point of control give you perspective on when we are trading around the fulcrum of the market itself and where that is, and the depth of volume that's there as well, once you start to move away from it, you interpret the volume in exactly the same way as you would do on a price-based support and resistance view. In other words, where you've got low volume here, lower volume here, we're moving up into these areas. You know, this should be a lot easier for the market to penetrate, because there are fewer orders sitting at these regions. Where you're up into these areas, it's much more difficult, it's more dense. There's a concentration of orders sitting there in the chart. And obviously the greatest concentration is down at the volume point of control. So as you move up to these areas across the timeframes, what you're looking for is the volume to subside. You know, if you're moving up to these regions, and then to find out where the next level is, you simply move up to a slower time frame chart to find out how that is playing out in terms of perspective for the volume point of control moving higher as the market continues to rise. Let's just go over onto the spot equivalent. There we go. We're now back in the spot markets. So we've now got the inversion of the dollar CAD, which is the traditional in the spot rather than on the currency future. And what's nice about looking at the matrix across the spot market is that you get the mirror image, if you like, in terms of volume and price. So whereas you're looking at obviously cable, what's going on there, in terms of the dollar CAD and obviously the dollar Swiss, you're seeing the inversion in terms of the move lower and how that translates. And it's always interesting to look at the volume profile and the price action. If you're trading long, what is going on in terms of selling of the dollar against other currency pairs, and are there any anomalies? Have we got any volatility triggers? Are we moving into low volume areas, high volume areas? Have we got price-based resistance? Have we got price-based support coming into play? You can see on this chart, these are the various levels on the accumulation distribution indicator. Now, these are price-based levels, and the thickness of the line here indicates that these are more well-developed areas, and the thinner areas are less so. In other words, these areas have been tested repeatedly and therefore have got stronger. It's very much like Popeye. The analogy I always use is Popeye and eating his spinach. The more spinach he eats, the bigger his muscles grow. It's exactly the same principle with the accumulation distribution indicator. The greater the number of times an area is tested, then the stronger that area becomes, and it's presented visually for you with the indicator. So where you get these very well-developed areas, they are much stronger, and even more so where you start to get these clusters building of 2 or 3, where perhaps an area on its own, like this area, was relatively minor, but once it starts to be sandwiched between other areas of much stronger regions, then this becomes immensely strong, a very, very strong area of potential support or resistance. Decent selling volume under those 3 last candles. Looks as though might have a bit of a reversal going on in terms of that one. What are we seeing over on the other charts? Let's have a quick whiz round. Okay, let's have a look at New Zealand dollar. There we go. A little bit of a falling away in volume of that last up candle. And that's what you're looking for the whole time is, are volume and price in agreement, or are we seeing some anomaly? Are we seeing anomaly over groups of candles? Are we seeing anomaly across the time frames? What is it we're looking for the whole time? And that's primarily what we are looking for. And if that candle completes in that particular way, then we could potentially have a 2-bar reversal, because if you overlay that candle on this one and look at it on a 10-minute chart, what would you have? Well, you'd have a little body here and a big wick to the upper body, and you'd be looking at that on 10-minute as a potential, certainly at the very least, potential weakness coming into the market, and possibly in the fullness of time, a full-blown reversal, particularly because when you go back to the CSIs, obviously, again, which are using multiple time frames, what are we seeing in terms of where the New Zealand dollar is? Well, it's already starting to move on the 1 minute. It's got into very strongly overbought up here. It's starting to move away from here, starting to develop into a downwards trend. You're starting to see some buying of the dollar coming in on 1, and rest assured, there will be scalping traders in here. You're seeing the same thing on Aussie. That's not to say the Aussie, New Zealand, and CAD always follow one another around as commodity currencies. They don't. Broadly speaking, they generally will, but you have to accept the fact that there will always be divergence. There may be things to do with the Canadian, with oil or whatever, or milk in terms of New Zealand, etc., or China in terms of certainly commodities, that will drive those independently, of course. But generally, you will see them moving around in typically the same direction, partly because they are considered risk currencies. So what we're seeing right now is we're seeing the Aussie starting to sell off. Hasn't started to sell off on 5. It's getting up to 10 and it's getting up to 15. Now, you know me very well. What I will be looking at, my eye is always drawn at the extremes. I'm always looking for the opportunity to get into a position early because I'm greedy. But more than that, I'm prepared to be patient and wait. I'm prepared to put more risk on the table by setting wider stop losses, and accept the fact that this currency, if I'm looking at Aussie dollar as a reversal now, this currency may well stay up here for a little while. Could stay up here all morning for all I know. But at some point, it will start selling, and the dollar equally will start buying. I don't know when that's going to happen. All I know is it will happen at some point. And that is a question of being A, being patient, and B, setting a much wider stop loss than you would have to if you were jumping into this as an existing trend. If you take the yen, for example, right now, the yen is selling off strongly across the time frames. In terms of, if you take the CAD yen, for example, we've got the CAD rising strongly here. Just pull this out a little bit, make it easier on the eye. The CAD is rising strongly, the yen is falling strongly. So if you're looking at the CAD yen right now and jumping into that trade, perhaps at the cross, perhaps just after the cross, wherever it might be, then your stop loss would be much closer. If you were a scalping trader on that particular time frame, 10 minute, you might have a, I don't know, 5 pip, 6 pip, 8 pip, something like that stop loss. Maybe not quite so wide, maybe wider, depends on your risk. But the fact of the matter is you wouldn't have to set it so wide because the trend is already moving, it's got momentum, you've got strong selling in one currency, counterbalanced with strong buying in the other. Don't even need to look at a chart to tell you what's going on there right now. That's the beauty of the currency strength indicator. It reveals all this as the starting point in your analysis. But if you're looking at this as an opportunity to get in up here, then you've got to put a much wider stop loss on because you don't know how long it's going to be here. The currency itself may flip-flop around. There may be pullbacks, congestion, reversals, might struggle higher again before it actually begins to reverse. And you would put on a stop loss of maybe 15 or maybe 20 pips, something much wider. But then the advantage is once the trend starts, you're getting in at the start. People who are taking that view right now will take advantage of that move. And if it comes down to here and you're getting in down here, well, there's no way you can claw that back. It's already been and gone. The trader who got in at the top has already taken advantage of that. And that's what it's all about. It's all about risk and reward. You have to decide on that. May suit your style, may not. It's as simple as that. Let's just go and have a look at to see where we were. So where we are, there we are. This is what's going on in terms of the Aussie. So we're starting to see that pause reflected. You know, we started to see it here. We had the volatility. We had a bit of a carry on, but it's you know, it's looking a little bit toppy. It's looking a little bit weak. You can see it on 15-second. Obviously, this is very fast. You know, this is where we are. It's exactly the same principles. You've got the volume point of control. You've got a very strong platform of support building down here based on price. You've got a ceiling of resistance up here. So this is channeling nicely. Ton of volume building around here. It's what you expect to see. You know, that's 15-second, but that's a microcosm of what is going on in terms of the 1 minute. What have we got here? We had looking for the anomalies. You're just looking for what's going on. Okay, this is a little bit anomalous here. What do we have? Lots of volume driven into this particular candle, but really not going too far. And when you compare it, remember we're comparing from here because this is 8 o'clock London time. So we're comparing in this segment of time here. If you took that particular candle there as your benchmark and said, well, okay, that looks fine. You know, no wicks to either side. We've got volume to match. Then you get this volume here. It's higher than that. And yet the candle size is pretty much the same. So it's starting to look as though the buying that is going in there is starting to struggle at that point. In other words, if this is equivalent to that, then this price action here should be probably up here somewhere, and it isn't. So it's a little bit toppy. Then you start to see this volume falling away. As we start to move up here, you're starting to see volume falling away. Conversely, you're starting to see a rise in the selling here. You're starting to see the market start to sell off again, but then that too drops away again. So, you know, we're moving into a congestion phase, and that's signaled on the trend monitor as well. We've gone through from bright blue into darker blue. We're now into darker red. If this is going to develop into a trend lower, then this will rotate into bright red and just confirm that particular move. Now, if it's going to drop to the downside, you can see this little no volume node here. You know, there's very little way in terms of looking at the perspective of price, a volume-based support. You know, that should move through there pretty rapidly because there's nothing really to cause it to pause there, nor indeed have we got any decent price-based support effective either. We've got some here, volumes building here, and then we go all the way back down to the volume point of control. Let's just head over onto the, let's have a quick look at the currency matrix. Let's have a look. There we go. All right, now we've got the matrix up. This is on 1, this is on 5, 10, and 15. And just to answer your question again, Francisco, yes, on what we will be doing, we are chock-a-block at the moment in terms of development work. TradeStation is coming out shortly. Then we'll be on TradingView, just porting all the other indicators across to TradingView. And we will try and fit all the updates that have come out of TradeStation, and one of which is actually adding those highs and lows and average numbers to the matrix, so that you get a sense of this number up here at the top and the number down here at the bottom. You know, is that an average? Is it a high? Is it, in other words, are we approaching an extreme? You know, what are we doing in terms of where we are? Let's just isolate out on the dollar. Dollar CAD's moving strongly. You can see it down there at the bottom. This is the Aussie dollar that we've got up at the top. No great surprise. This is the dollar. It's actually on a dollar CAD chart. You can see it up here. You can have these on any particular pair. I've got pound yen, pound dollar, and Aussie dollar over here. So you can start to see the strength of the selling that's going on at the moment in terms of dollar CAD. That was one we looked at earlier on. This is 15 minute, but you can see it down here at the bottom. You've got it down here at the bottom on 5 as well. So it's certainly the strongest. The Aussie dollar, as you can see here, I don't know what it was doing a few minutes ago, but it was almost certainly be up the top here. But you're starting to get a sense now of the Aussie beginning to roll over. You know, this is what you're seeing. The chart behind knockback is on 1 minute. This is cable on 5. So you're starting to get a sense that, you know, that strong dollar selling that was prevalent at the start is now starting perhaps to pause a little bit. And obviously what you want to see in terms of the currency pair you're trading, let's just isolate out on, let's go back, let's go to the yen. What we're seeing in terms of yen, let's just isolate that out, that one there and that one there. The yen is probably the easiest pair to look at in this context, because if the flow of sentiment is moving in the same direction, in other words, the river of sentiment, think of it as a river, is all flowing in one direction, then ultimately what you should see on the matrix is all these currency pairs marching to the top here, because the yen is the counter currency. So in terms of the flow of sentiment, obviously what we're seeing right now is strong yen selling, because these pairs are all moving higher. And what you want to see, if that's going to continue, you want to see these moving up, you want to see these moving up in the time frame, and you want to see these moving up in the time frame. Because if that is what is going on, in other words, it's all about risk on or risk off, then if you're trading with a particular currency pair, you want to be joining the river of sentiment rather than paddling your canoe against it. So if you're trading any of these pound yen, Swiss yen, CAD yen, whatever it may be, you want to be assured that the rest of the market is doing that. Now, that's not always the case. You can see here the New Zealand yen down here is a little bit of a laggard. But in terms of the broad sentiment, it is pretty much that. And if we head over onto the indices, that's why. Because we're now on the primary US indices. This is the YM, which is the Dow. We've got the NASDAQ NQ, and we've got the ESE mini up here. Just refresh those. There we go. Let's refresh that. Oops, sorry. There we go. So on the top line, we've got the three principal indices on 5 minute. That's the YM, the NQ, and the ES. And the bottom line, we've got the daily charts for those equivalents. And you can see what is happening. It's you know, it's a pretty strong move at the moment. But what's interesting in terms of NQ, and these do not, I'm not going to go into it now, but there has been a lot of divergence. I'll do it this afternoon. We've got a huge volatility candle on the 5 minute chart for the NQ. Absolutely massive, ton of volume coming in here. So there's going to be some congestion there, possibly a reversal, but certainly for the time being, I'm just looking across and seeing what's happening in terms of the VIX. That's dropped as well. So, you know, that's all telling you that sentiment right now is risk on. Yes, Dan. Yep. Just going to pass back to Anna. Sorry, I've been rattling on.
Right, hopefully you can see my screen. I've kept the the cable profile up. That's the 3-minute. I've actually got the 5-minute chart here. And of course, I was just looking at one chart just to remind you that do look at multiple time frames. This is actually the Renko. The Renko will it takes away that the noise, if you like. It smooths out the price action. With regard to the Renko, certainly on NinjaTrader, you can also apply the Camarilla indicators. You can't do that with MT4 and MT5. But the reason I just wanted to pass over was this. You know, I said about what is the various permutations to do with the dollar. This was just on my Twitter feed. I had a very, very quick look, and it's actually quite a nice little summary, and it's easier than saying all this. So as I said earlier, a blue wave. Here we are. As I say, the dollar expecting to go, a spending boost, more stimulus, exactly what we said. A blue divided Congress, that's when you have the Democrats get the presidency, the House, but not the Senate. Again, that's perceived at as the dollar going down. The status quo, you know, the uncertainty, etc. This is when dollar comes a safe haven. A red wave, as I said, it's a case of, well, you know, who is going to spend more, basically. They're both going to spend. It's just a case of who's going to spend the most. But I just thought it was a really nice sort of summary, infographic, if you like, of what to look out for. So dollar is really the currency that to watch. Right, can I pass back to you? Is that okay?
Yeah.
Lovely. So pass back to David. There we are. Is it back to you?
Yeah.
Thanks, love.
You see my screen?
Yes.
Hopefully you can see my screen again. Let's move that over a bit, tidy it up. There we go. You got my screen there? Yeah, fine. Very quickly, you can see what's going on here in terms of indices. They're carrying on higher. So, you know, if that does continue, we've got a bit of congestion here on NQ, but broadly speaking, they are still positive and moving higher. And that will be reflected in terms of the yen. We go back onto the, just change this over onto yen, that out of the way. Let's put, which one should we go for? Let's put pound yen up. Let's just put the pound yen up. There we go. So that's what's going on in terms of certainly pound yen at the moment, the most volatile of all. Just one thing before we wrap up, I pulled up on the, this is on the betting. And one of the things I would urge you to do is just keep an eye on the odds. Just keep an eye on the betting sites. I've got, this is on Sporting Index, the odds there, and we've got the odds here quoted in slightly different ways, but essentially what they're saying is that this is very, very close. And remember that the betting companies, generally speaking, the reason that we look at them quite closely, particularly for big events like this, I'm not saying we use them ourselves personally, we don't, but we certainly use them for indications when you have these big events going on of which way they're likely to fall. The betting companies, obviously, goes without saying, have a vested interest to get this pretty much right. They can't be wildly out, otherwise they'll absolutely lose their shirt. So, you know, do go and find the betting sites. Keep an eye on the odds. They will change. You know, these are live odds. They're constantly changing, but you can see how close this is, 4-7, 6-4. You know, that's pretty much it. Betfair, I have to say, you know, they cannot get this wrong because they've got both people backing and laying all the time. And there's a ton of money going in on this. And it's just interesting to watch it throughout the day, watch it overnight. Just keep one of these sites up. Let me just wrap up because we've gone way over time. You'll find all the indicators over here at quantumtrading.com, MT45, NinjaTrader 78, and also TradingView. I can assure you TradeStation is coming. It has been a long process, much longer than we expected, for which we apologize, but you know, they will be coming out very shortly. That's on both 9.5, which is TradeStation Global, which is interactive brokers with TradeStation. So if you have an IB account, which is a deep discount brokerage, covering or every single market you can think of and every single instrument. It is an amazing brokerage. That will drive the TradeStation 9.5 platform for you. It's a very simple link up, and it runs great. We've done the indicators for that version, and then we've got TradeStation Securities, which is version 10 and above, with exactly the same set of indicators and available for both platforms. So that's coming soon. As soon as we've done that, we're going to drop onto TradingView, port all the other indicators across there that were missing because we didn't have the functionality in PineScript, which we now have, thank goodness. So they will all be available there. So you have the currency matrix, the currency array, the currency heat map, the volume, the VPOC indicator as well, all be there. And if you've invested in the full package, the good news is you get all those free of charge, because when that's done, the price of the TradingView full package will be the same as MT45, in other words, 894, as opposed to whatever it is at the moment, 600 and something. So you'll get all those free in effect. So it's a great time to invest in the TradingView package, I can assure you. So that's where we are with the indicators. That's where you'll find Anna's latest posts, analysis, what have you, all the links to all the various sites. All the books are up on Amazon in both Kindle and in paperback version. You find them all there. And finally, the Forex education program, you will find it at quantumtradingeducation.com. If you've invested with us in other indicators, perhaps not even the full package, but you want to join the program, we make that possible for you. We give you a credit for those indicators. So if you've bought 1 or 2 or 3 or 4, whatever it may be, or if you've actually got the full set, you get a full credit for that. You only pay for the educational element of the program. We just upgrade you according to however much. So you always get a credit for what you spend with us. We're always, because you've invested with us, we want to protect your investment. This is the program. It's a comprehensive, is not really a good description. It covers everything you need to know. You have the psychology, the fundamental analysis, relational, technical, and mechanics of trading module. And then down at the bottom, you've got the VPA chart examples, how to use indicators, pulling it all together, topic webinars, webinar library, and resources. It's huge. I think there's something like 440, 450 lessons in there. There's 250 odd hours of video. There's 13 PDF downloads. And of course, it's all backed up with the VPA chat room, which Anna and I host every day. So you'll be amongst friends, you'll be amongst other students, learning, some more experienced, some less experienced, all helping one another. And we have some very successful students in there who are trading full time. So it's a fantastic program. We're very proud of it. We've had a lot of fantastic feedback, really, really very humbling, the feedback we've had. And it has helped an enormous number of students to actually achieve what they want to achieve, which is either earning an additional income to alongside their full-time job, or indeed, as I say, some have actually now trading full-time. So it's a humbling experience, I can assure you. So that's it, we're done. We will be back at 3 o'clock this afternoon US time, when the US markets will be opening up and getting to grips with what's going on. Lots of volatility, no doubt. So we will see you then. Just check there's no more questions. Antoine, oh, okay, yeah, it's not, we can't do that, unfortunately, Antoine. Much as we'd like to, it's an indicator, so we can't add that to an indicator, unfortunately. Sorry about that one. We always try and accommodate where we can, but there we go. So we will see you later. Thanks for coming along today. Hope you've enjoyed it. And as I say, we will see you at 3 o'clock this afternoon, and we'll see what's going on in terms of the presidential election. So see you later. Enjoy the rest of the trading day. If not, we will see you same time next week in this room, and enjoy the rest of the trading week. So bye for now.